presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
What's going on, folks? This is Jacob Shoup filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. He'll be back tomorrow. Today we have Basil Chapman and Tim Ord on, so I strongly recommend you guys stay right there. And basically, we just have a great program for this hour. Let's take a look at what's going on. Of course, I was on earlier. If you missed my show filling in for Tommy, check it out, because I went through some stuff. It was a nice slower morning, but some good stuff covered nonetheless. We have the E-mini up about 0.51%. We have that SPY up about 0.48%. The Russell futures are tearing it up right now at 3.29% to the upside. The NQ's off slightly, and that composite is basically sideways to the upside. You had the composite kind of moving around a lot today. Let's see here. Basically, we're kind of been sideways the entire day, as you kind of see from it. The Dow futures up about 1.78%, and the Dow Jones Industrial, we're nearly at 41,000 after cracking 40,000 not too many sessions ago. Gold doing okay, actually getting close to that UBS kind of price target from about, I would say, mid-June of 2,500. Of course, if you guys do not have the gold report by Tom O'Brien, strongly recommend checking that out. You can go to TFNN.com. While you're there, take advantage of our Tiger Dollar bonus. Okay, you get a 20, 30, even 40% bonus on your Tiger Dollars. Those are applied to every purchase. They never expire. And if you've never been a Gold Report subscriber, strongly recommend doing it, because we have a 30-day money-back guarantee if for whatever reason it does not work for you. But that has had a great run this year, so strongly recommend checking it out. Of course, we have Tim Ord on a little bit as well, and we all look forward to his metal analysis. We have silver up about 189. I'm still looking for Mike's gifts in the den because silver is doing okay today, trading at 31.51 on that contract, and then copper still down roughly where it was this morning, around 4.44 on that contract, and then crude off a little bit as well at 80.86. Trying to see if there's anything else interesting going on. I know SoFi popped today, which was kind of nice. Rivian actually doing okay today. If I remember, last time I looked, 3.66% today. That has had such an insane run up, not on a significant amount of volume, which of course is always something to look into. But of course, they have earnings August 8th, and I believe they're going to ride that into the earnings. Now, it's already anticipated that the earnings for Rivian won't be so good. They had to shut down one of the factories in order to add more robots and increase productivity. We all expect that from newer companies. They obviously got that massive cash injection from VW, and they're projecting to be, I guess, cash positive or revenue positive by Q4. And so if they remain on track for that, I really do believe Rivian can have some nice movement to the upside. We were around a few days ago, a few trading sessions, around 15.6 billion market cap, and now we're trading at 17.8. Quite the move for Rivian as well. I don't know how Lucid's doing. This stock is dueling up 9%. If I could take this back, just even on a monthly, you can see a massive run up from this stock, even from the beginning of the July. High of 437, complete sell-off, and it looks like we're going to try to go back at least somewhere to that area. Now, what I want to talk about is Broadcom a little bit. They had that 10-for-1 split coming off a little bit, and kind of do some clarity on what this company even is, because I think there's a lot of conversation obviously around chips and semiconductors, but these things all do different kind of things, right? And so I saw someone was talking about online that I knew about comparing NVIDIA to Broadcom and what is the better investment. And this is where I say, like, you know, you see these big names, it's easy to kind of all lump them together. It's like, oh, AI, it all has to do with AI. And I mean, yeah, while that's true in some certain capacity, these companies do different things, right? And so it's really important to know what each of these companies do and how they fit into the major framework that will be a world that is dependent on AI, in a sense, to do enterprise on an international basis. So AVGO, looking at Broadcom, obviously this is down right now. You had a lot of people talking about Nancy Pelosi buying a huge position in it before the split, off about 1.8%. When you're talking about NVIDIA, right, you're talking about these GPUs, the graphical processor units. That is really the main, and of course, NVIDIA also has like CUDA and everything, which is a platform to kind of scale these, or use these GPUs to their full extent, and there is some software behind that as well that is extraordinarily valuable. But what AVGO does, what Broadcom does, is if you can think of like single computers, right, or single boards as like neurons, what Broadcom is that synaptic cleft between the neurons where all the communication goes on and all the brain activity. It's not a great analog, but it can kind of help. And Broadcom creates products that can create that ion movement from the neurons and make it faster, okay? And this is really the big thing. When we're talking about getting away from kind of tech like CPUs into neural processing units or just in general XPUs, this is where Broadcom really shines, right? Now, NVIDIA does compete in this realm of communications as well. They bought a company, I believe, called Mellanox a few years ago. And Mellanox's standard of communication is something called InfiniBand, okay? And I believe Azure Cloud uses InfiniBand to some certain extent, but the whole world really uses the Ethernet protocol for communication. I think we're like that doesn't matter. It's too technical. But the point is that Broadcom is not really creating a proprietary protocol for communication like NVIDIA is trying to push with InfiniBand via their Mellanox acquisition, but instead is kind of promoting this open source Ethernet development, right? And we still use Ethernet, we have for a very long time. And that, I think, kind of puts them in a good position, right? Like this open source concept always is better than the closed source, especially when you're talking about something like an industry that already has a developed and confirmed standard. So take a look at Broadcom. They are developing switches as well that have, let me see if I can find this article on it. It was really actually pretty crazy. But they're developing switches with neural processing units built into them, which is really fascinating. Yeah, their latest switch silicon boasts a built-in neural networking engine. It says it can be trained to combat network congestion on the fly at line speeds, all without compromising latency and throughput. And this is the place where Broadcom can shine in a few years in this future, and when this really gets kind of fleshed out. Folks, stay right there. We're going to be joined by Basil Chapman.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until July 22nd, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred and never expire. If you want to receive a 20, 30, or even a 40% bonus when purchasing Tiger Dollars, now's your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until July 22nd, so lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. I want you to take a look over on the screen here. This is an article I found really interesting. It was Financial Illiteracy Epidemic. 57% of Americans can't even score 50% on a financial literacy test. Now, this is a new report from Global Financial Literacy Excellence Center. They've been doing this test only for a few years right now. But this is one of the major criticisms you hear about the education system in America, that it doesn't prepare the youth for the real world of finance and really personal finances, right? And this is why, one, I love working here, because that's what we try to do at TFNN, right? We try to teach people who aren't familiar and really create a network of people who've been doing this for a long time. And it's an amazing thing. So I'm really happy to announce that Basil Chapman actually is having a new subscriber webinar. Okay, this is going to be July 23rd from 4 p.m. to 5:30 p.m. Eastern time. So this is after your trading day. It's sectors and stocks to focus on in this next phase of the market cycle. Of course, this is 90 minutes. You can check all this stuff out here. Will the sector rotation see new groups rallies? Can the out of favor big losers become winners? So on and so forth. And guys, what I want to say, if you are a subscriber to the opening call newsletter by Basil Chapman, you get access to this webinar for free. So you got to subscribe to check it out. And before you do that, really recommend going here and getting some Tiger Dollars with this sale. There is no better time to get yourself Tiger Dollars in this sale. And then there is no better time to be an opening call subscriber. Basil Chapman, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. Quite an interesting market the past few sessions, huh?
Well, that's for sure. And it's also such a fascinating market, because the aspect that I thought was just an idea for me, and it was an idea that more and more I looked at different sectors, and I said to myself, I think this Microsoft stock is telling me a great deal. And I said that the way that IWM, the Russell 2000, is just sitting there, if money starts to flow out of the semiconductors, they don't have to tank or anything. They just need to not go up or stall. That money has to go somewhere. So let me go through this right now, because the Dow, here's the Dow on the left is the daily, in the middle is the weekly chart, on the right is the monthly chart. I won't go through all the technicals. I'll go through some of it in my show, the Tiger Technicians Hour, tomorrow morning. But as you said, I've got a webinar coming up a week from Thursday, and the whole thing about it is to talk about these patterns. And most importantly, what we're looking at is there's something that I use, which is called the 9-14 moving averages. So if I go to this chart right here, you'll see this little green line right here is running sharply, and it's above the 14-period moving average. So the green is the 9, the 14 is the black line over here, and you can see how strong it is. But this weekly chart, since it crossed positive back in the first week of November, has remained green. That's the weekly chart. Even when the market pulled back, when the Dow pulled back, it ran. So this is very interesting. There's a cup formation that went to like a W. There's 2 U-shaped patterns, and now we're breaking out. It was really important that we broke above that 40,077 high that was made earlier on. That was on May the 20th. So a couple of things. We've been long. You can see it says long right here. That was the day of the low on October 2022. We've remained long, and we add to the positions. We also have the 3 times long. We're looking at this as if to say there's a chance that in 2024 all the indices, key indices, will get to major highs. So what's lagging? So the Dow acting really well, and as I said, Microsoft, which is in the Dow, look at this, it's stalling. Here the Dow is up 700 points, and Microsoft is down. It's down almost 5 points. So this is a technique that I discovered a long time ago. I don't want to get into it now because it's taking too much time, but in my show tomorrow I'll talk about it. It's called I always name these patterns, and I give them a funny title because that's a good way to remember them. I call it the stork leg formation. You can see there's a little design here that says straight leg up, one leg, and then there's a very oval body. It has to be oval, and then there's a neck, and then there's the beak that comes down. And here it is. There's the long leg. Here's the oval pattern. There's the beak. And we'll see if Microsoft doesn't start to pull back towards the 431, the arch high. So that's in the Dow. Now, isn't that interesting? Because even with that, the Dow is up huge. And that means, and that's the reason why I wanted to do this webinar. I was hoping to do it this week, but it turns out that I'll do it next week. But in my overview that I do an hour-long overview every weekend for my subscribers, besides my daily newsletter, and I discuss these aspects, and I'll do it again this coming weekend. I'll have this. I'll start the webinar, which is coming up a week from today, Thursday. Well, a week from the 23rd on Tuesday. Today. Right. I'm sorry. Sorry, that's right. So I want to get ahead of the game. So most importantly, the Dow is United States economy, and that's really the Dow 30 just is a great mix. You've got financials, and we have a financials breaking out. This is Bank of America. Look at that move. Who would have thought that Bank of America stalling in the 30s could suddenly be at 44? But that's really important. So you see this kind of lopsided U-shaped pattern in the monthly chart. Look at this. Keep your eye on that monthly on the right. Here it goes. Look at this. Look at that. What is that? That's the iShares, the Russell 2000. So another reason why I wanted to do the webinar as soon as possible is that we're getting a rotation through the different sectors. And until the IWM started to really break out and move to show that it's got leadership capabilities at the same time that the SMHs, which were the leaders, start to stall, I didn't think I was that comfortable saying that the IWM could lead. But look at this pattern on the right. Look at that U-shaped pattern, and we're already more than halfway into recovering towards the 244.46 all-time high. So we've been long, and we want to add to the long positions. And the reason that the webinar will be very important is because now I'm seeing that I can actually dive into some stocks. I usually like to get a little pullback to have some security, but at this point, you've got some stocks that are starting to break out that have been real laggards and that are really important to the economy, and many of them actually are in the Dow, that I think you can start positions here, and I'll explain when I send out my newsletter, I explain how we could actually step in with a two-part position starting right here, waiting for that pullback to add to the position because it looks like they want to go higher. So it's really timely. It's very important, and it's very important that we start to rotate through the different sectors. You know, I speak about the IWM, and if you relate it to the S&P, which was at all-time highs, think about the XLF, which is the financials, the S&P Select Financial Spider Fund, at all-time high. But the KRE, which is really important, is the regional banks. They've been lagging. are they going to now move on? So I think there are a lot of stocks that you don't have to go for the all-time highs. You can go for stocks that have been lagging, and they have some room to go. So I think it's quite timely to do that. And as you say, we've got the Tiger Dollar sale that makes it quite a bargain. And I've got the my webinars that you can listen to, all these webinars that I talked about. Yeah, the rectangle formation, we just broke out of that in the Dow. Look at this I drew it in right here. There's a rectangle, and we are sharply above it. That makes this whole area of 40,000 very good support shorter term.
Basil, thank you so much. We will see you tomorrow at 10 a.m. and then next week, Tuesday, July 23rd, for your newsletter. Thank you so much for joining us.
Thank you, Jacob.
Guys, if you are not a subscriber to the Opening Call newsletter, become one today. Stay right there. We'll be right back with Tim Ord.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. Finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. Before we move on to the next segment, I just got some news So from 11:02 a.m. today, nothing big, but it's Kaspersky, which is a massive cybersecurity company, was just banned by the Commerce Department in the U.S., which is super sad because Kaspersky has discovered a lot of extreme vulnerabilities, even like in our iPhones in recent times. They said in a statement that they've contributed to the nation's strategic cybersecurity goals for close to 20 years, which is true. And they're headquartered, at least originally, in Moscow, which was the initial cause for the Commerce Department banning them, saying that it's an undue or unacceptable risk to the U.S. national security or safety and security. Crazy. Anyways, let us move on here. We have the E-mini up 0.5. We have the Russell futures still roaring at 3.46. The NQ's sideways right now. Dow futures and then gold, of course. The big talk of the day, up 1.69%. Let's see what the GDX is doing right now. We're up 3.29% in the GDX, and that brings me to the next guest, which is Tim Ord of the Ord Oracle. That is ord-oracle.com. Tim comes on to the Tom O'Brien Show every Tuesday and Thursday to give us some of his expert analysis. Tim, how are you doing?
Good. Thanks for having me on again.
Absolutely. Happy to have you.
We can cover the S&Ps or we can cover gold first.
Yeah, why don't we do the S&Ps first? Because I know, everyone's waiting on the gold, so we got to save the best for last. I got that last email from you. Is that what you want to go over first?
Actually, yeah. I don't know how to lead. Let's see here. Chart 4, chart. Yeah. We can do that one first.
Okay, so that's with the daily 14 SRI and the daily SPY.
Yeah. So I kind of combined two indicators here to try to figure out what may happen near term. But the bottom window is the daily National Association of Active Investors Managers Exposure Index. So in other words, when that thing's above 100, you got on the right there, you have a scale from basically 0 to 110. And when it gets over 100, basically that's their exposure. So last, I think it was July. No, I don't know. It was the last couple of days anyhow, and that what's today, Tuesday. So it'd probably be late last week. The exposure index hit almost 104. In other words, 100. The National Association of Active Investors Managers were basically 100%, 104% long. So they were 4% on margin, give or take. And so in the past, I've noted that, not all of them, but with red lines. The only reason why I put those red lines in there, so follow me here a little bit.
Yeah.
The top window is the RSI 14 for the daily SPX. And whenever time it gets above 80, that's usually never the final high. That's usually a timeout in an uptrend. It's never a top. It's just usually it's got a lot of momentum, and the market usually takes a breather and starts going up again. How long that breather is, I'm trying to determine, and that's the reason why I got both those National Association of Active Investment Manager Exposure Index and the RSI on the same chart. So one's sailing, one's, which is the bottom window, says it's kind of leans bearish. You get that many active managers over 100% long, that's usually kind of a frothy market.
Yeah.
And that's what's going on right now. But you got the RSI hitting over 80, which says, in general, we're going to continue higher. But that continue higher could be a month or 2 or 3 months from now. Well, I labeled the times when the National Association of Active Investment Managers reached over 100% and the daily RSI reached over 80, and those are the lines across the chart there. And when that happened, the least time went sideways was back in 2024, looks like a January, and went sideways for a month. All the other times went over a month. And I'm thinking we're going to hit a consolidation here. We're probably hitting one right now. And I'm thinking this consolidation could last actually into September, maybe in October. And previous cases when both were triggered here, where the RSI hit 80 and investment managers hit over 100%, sometimes you went sideways for several months.
Mm-hmm.
and only in one case, you went sideways for a month. So it kind of reinforces my idea that probably we're in a trading range that may last all the way into October. So that's what I'm coming to the conclusion, because of these two indicators climbing together. So that's the reason why I want to point it out. So this is probably not the time to be long here, and that's we're even up a little bit today, but volume is not really big today. So I'm thinking we're hitting the consolidation right now. So I think 30 days from now, or even a week from now, we'll be lower than where we are right now.
Yeah, we have a lot of shorts in the den, too, on the market, so.
Yeah, I don't.
So, all right, so we went through that. Do you want to go to chart 1 from there?
Well, here's, we can go to chart 4. We're kind of going backwards here.
Perfect, yeah.
This is the weekly association, or the National Association of Active Investors Managers. And there I got the lines drawn again, but that's on the weekly time frame, so doesn't really add to the picture much. The next window, which is, or the next chart, which is chart 5, shows those RSI above 80, in which I said there's never the last high. So again, chart 7 covers both of that. And chart 6 here, let's see what I got. Chart 6. Oh, okay. Let's go to chart 6.
Perfect. Yep.
This is so I'm thinking we're hitting a high in this vicinity right now. And where can we go? Well, I've got trend readings anywhere from basically 1.2 or higher. In other words, I got some trend readings there, 1.19. That's close enough. But when you get trend readings above around 1.2 or higher, that's panic. And panic only shows up at lows. We had a bunch of panic readings right around that 540 area on the SPYs, and the market kind of built a base, and we talked about it on your show that I was looking for a rally out of that time, or out of that area, and sure enough, we did. So now we're up into an area where I think we could consolidate. Well, the most likely place for consolidation to go is back down into that panic area. Once the panic area starts forming panic on the trend, it will continue to do that. So if we get down to 540, which we probably will, the trend most likely will start jumping up about 1.2 again. That will suggest support.
Yeah.
I hear the music.
Absolutely, Tim. Stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. We are joined by Tim Ord of the Ord Oracle. Tim, we were just looking at that panic trend level on the SPY chart. I want to see where else you want to look at.
Well, actually, I wanted to say a couple more things about it. The bottom window, as you notice, the top window is the SPYs, and it started to rally basically first part of July. And if you notice, the bottom window, the VIX was going up pretty much the same time. Normally, when the SPY is going up or SPX is going up, you want the SPY or the VIX either go sideways or down. And if it goes up along with the S&Ps, that's usually a bearish sign. So we got some bearish signs by the VIX. Also, yesterday's trading tested the previous high of last Friday, and it did so on about, eyeballing here, looks like about 20% lighter volume. And the testing on a previous high on at least 10% lighter volume shows that previous high has resistance. Now we're trying to rally today, but we haven't touched a new high. So kind of reinforces the idea that we're probably volume studies and VIX studies suggest we're probably hitting some sort of a high. Not a huge decline here, but it works out about 3.5% if we do get the pullback down to 540. So pretty much done with the S&Ps.
Well, Tim, let me ask. We have some questions from some of our viewers. Do you have any opinion with this kind of outlook and the potential rate cuts in September? Or are you just kind of looking at, basically the technicals and seeing we're at some certain saturation point?
Well, I see the market over the next 3 months, basically, probably in October, is just kind of sideways.
I see.
And I don't look for any big decline. I think we're going to hit 540, and we're going to go right back up and probably test, the high right where we are right now. So it's going to be, I think, more of a sideways movement on a bigger time frame. So I think we'll see probably in August the 565 area again, where we're hitting right now. And in October, we're probably going to see 540 again, or September. So it's just, I think it's just a sideways trading range. No real damage to the downside, but, it just builds a cause. We're just flipping sideways here. So
right on.
This is, actually, if you even stayed long here, you probably wouldn't get hurt much other than, at worst case, 5%. But it looks like to me it'll probably be, 3.5, 4 at most. So
perfect.
Nothing real, but it'll be more frustrating than anything. So
yeah, no, I hear that.
We got time to do the gold market.
Absolutely, I think we need a tear into gold too. Let's see it.
All right.
I have the chart 2 up. GDX.
Yeah, chart 1. It's kind of a repeat. We talked about it on your show. This is a monthly chart. This is my opinion, the holy grail. To get this thing turned bullish is really a good sign for a longer term, because most of these signals that either bearish or bullish, at least a year and sometimes 3-4 years. The last signal was generated before the current signal was back in 2021 and went down until basically May of 2024, which it flipped up. So I'm thinking we're going to at least go up for another year here, maybe 2 years. So we're good all this year and probably good most of next year for a bull gold market because the momentum has flipped up on the advanced decline and up-down volume indicators for GDX. And so you got momentum. Once momentum starts going one direction, especially on a monthly time frame, it usually proceeds in that monthly direction for a long time until you get to some sort of exhaustion. And I don't know where the GDX is going to go, where the high is. The next upside resistance we got around 45, which we're again approaching pretty fast. But bigger trends up, that 45 won't be the final high, but probably be some sort of resistance. So let's flip to the short-term chart, see where we are on graph 2.
Yep.
And this is the bottom window is the 15-day average of the up-down volume, and the next window higher is the 15-day average of the advanced decline, both for GDX. And so, again, this is just momentum indicators. It kind of measures the up volume compared to down volume, advanced decline compared to compared to the decline. So basically, when both those two indicators are above -10, you got an uptrend, and all that blue area across this chart shows when that happened. And the pink areas is when those two indicators are below -10. And we've been above -10 since beginning of March, it looks like, and we're still way above -10. You know, we're coming in ones like 24, the others around 29. So that's pretty strong. Not really showing any weakness yet or anything. So even though this market's kind of really barreling ahead in a big way, internally so far it remains decent. We're not showing as this, you know, if GDX is going up and those two indicators are going down, that would be a time to start to worry. And so far that hasn't happened. So higher highs, even on a short-term basis for GDX. We can go to chart 3 here.
Yeah. Pulling up right now.
Right.
Got it.
Yeah, this is a kind of a real big view. This chart goes back to like 1999, I guess. But the middle chart is the weekly HUI gold ratio. And you can see I got a blue trend line connecting the highs going all the way back to 1996, and I got circled in red that we broke above that trend line. And so that trend line, you know, is, 30 years or better? 30 years or close to it. And we finally broke above that trend line. So the character of the market is probably changing here. And we're going to see gold stocks outperform gold probably over the next 1.5 years or even longer. So this is kind of a big development because these gold stocks really haven't done anything for basically about 10 years. It just, since the 2012 top, they just kind of drug around the bottom. So that whole scenario, I think, is starting to change. We got a lot of these penny stocks that are turning up on the monthly time frames. But what I want to really point out on this chart is the RSI for the weekly HU gold ratio. And what I would point out is when this RSI for this ratio gets up around 70, which I noted with parallel or blue lines across the chart, usually get some sort of a consolidation. And you can look where that consolidation happened, which is the top window, which is the weekly RSI. It does a good job picking out the highs pretty well. And so RSI right now is around 67, still quite a ways from that real. It's honing in on that 70 area. But, you know, we could stall in the market for a week and that RSI will come down. So it doesn't mean we're going to hit that, you know, by Friday or something. This is a weekly chart. But it could happen sometime in July or August that we get some sort of a high. We'll have to wait and see. But that's one clue that you're probably going into kind of exhaustion move to the upside when the RSI 70 reaches, or RSI of the HUI gold ratio on the weekly time frame reaches above 70. And so don't know when that'll happen, but something to watch for.
Fantastic. Tim, thank you as always. We will see you Thursday, guys. If you want to see more from Tim Ord, you just go on ahead to the ord-oracle.com. Go give him a check out. Tim, thank you so much for joining me today.
Right. Thank you.
Folks, stay right there. We'll be right back for a short segment.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. I was just joined by Tim Ord of the Ord Oracle. Go give him a check out at ord-oracle.com. And another thing, gotta suggest again, Tiger Dollar bonus. Make sure you check that out and get you some. And then afterwards, you can check out 2 great webinars we have from Tim Ord. That is the Secret Science of Market Tops with Tim Ord and the 6 Secret Ratios every trader should know with Tim Ord. That's not your style. Again, I've got to say, we have next Tuesday, the opening call subscriber webinar. Get your Tiger Dollars. Get this 30-day money-back guarantee. If for whatever reason you don't like the newsletter itself, and when you're a subscriber to the opening call newsletter by Basil Chapman, you get so many other webinars. You get access to all of these, which is an insane value. I mean, really. Anyways, if you missed either of those interviews, make sure to go to go to YouTube.com and check in TFNN at that search bar there. You can see those videos in the archives. They'll be up shortly after this program. Make sure to give that a like and give us a subscription. It really helps us immensely on YouTube. All right, let's see here. This is some interesting stuff. We were talking about it a little bit in the YouTube comment section. So as of Tuesday morning, the markets were pricing in an 100% chance of an interest rate cut in September. That's per the CME Fed Watch tool, and that's up from 70% chance a month ago. Of course, you had better than expected inflation reading in June, signs of further cooling inflation in the labor market. I would argue, too, that you're seeing some larger brands contract on the quarterly, so like Burberry, for instance. And if you remember last year, so Burberry shares dropped 15%, issued a profit warning and replaces the CEO. Now, I mean, 15% is a lot of those struggles they have are obviously internal and kind of unique to them, but I think we might start seeing a slowdown as well in some other luxury consumer brands. And remember, though, that was one of the bastions of positive quarterly growth, even in the face of inflation and people reducing their spending. So now you're even seeing that at the luxury level. Folks, thank you so much for joining me. We'll be back tomorrow at 9 a.m. with Tommy O'Brien and the morning market kickoff. And then we have Basil at 10 a.m. You have Steve Rhodes at 11, Larry, and then the man, Tom O'Brien. I hope you all have a great rest of your day, and we'll see you tomorrow morning.